It's time to talk about gold. Now, that's not something I usually write or speak to you about a lot. After all, most people don't see much correlation at all between gold and the real estate cycle. So let's say you own some gold yourself. That could be gold jewelry, could be physical gold bullion that you have in storage somewhere, or perhaps you'd like to invest your capital in stocks exposed to gold and relevant ETFs. Now, I'm willing to bet two of the main reasons why you do that is because gold is regarded as one of the best forms of money that humankind has ever come up with, and that it also acts as an extremely good hedge whenever there are bouts of high inflation in the economy. In regards to the second point there, if you look at the chart for US price gold, you'll notice that when inflation went higher, the price of gold actually dropped. It's not supposed to do that, yeah? Not if it's a hedge. So what's going on? Let's take a big step back now and let's talk about the interactions of three very, very vital and powerful forces. One of them, of course, is the real estate cycle. The second one is the US dollar, particularly what the US dollar does at this late stage of a cycle. And the third one is the commodity wave, or also known as the Kondratiev wave. You also hear people refer to as long wave of commodities or K wave. All good, they're all one and the same. Now, these three forces, if you will, have a complex interaction between themselves. Now, unless you follow each of them religiously every day, you're not going to see it. However, it's very important to understand that gold acts as probably the highest profile enabler of how all these three forces are interacting and affecting each other. So, in today's newsletter, I try to explain as simply as possible how these three forces interact with each other and how they affect the price of gold. But I do it by looking through the lens of the real estate cycle. It's a really interesting read, this one actually, because most commentators do not see the interaction of all these three, and they don't really understand how they're all affecting each other. And of course, finally, they're unable to use them to predict with any sort of accuracy the future prices for gold, be them high or low. So, the newsletter is in the description box below this video. Click on it, read and enjoy. Why don't you hit the subscribe button and hit the like button if you enjoyed it as well. Comments are always welcome. I understand that we are all busy and life is very fast at the moment. I believe the best predictor for what gold is going to be doing as we enter years 12, 13 and 14 of the current real estate cycle, which, if you don't know, is year 14, the peak. The real estate cycle still remains the best tool for you to understand the timing. When is gold going to break out? When is it best to perhaps sell your gold? All of that can be yours if you understand the timing of the cycle. And in this newsletter, that's what I try to lay out for you. Hope you enjoy it. It's not something I usually cover, but hopefully by the end, you'll understand the importance of it. I'll see you all next week, yeah? Take care.